Russia has 16% of their $640 billion of reserves in dollars. They have 32% in euros. So they have almost 50% of their reserves in currencies that are controlled by people who want to do them harm. Now, I think we should do them harm. But the point is, from Russia's point of view, that's not a great position to be in.
While the world reels from the ongoing geopolitical tensions between Russia and Ukraine, billionaire investor Bill Miller believes this may possibly lead to a very bullish time for Bitcoin. In a recent interview, the fund manager says that a sizable percentage of Russia's reserves are stockpiled in dollars in euros. Adding to the massive friction between Russia and the West, this places the European country in a very tight spot. While one could argue that Russia had triggered the sanctions against it, this could happen to any country at any time, even when they are not attacking their neighbors. Miller says that Bitcoin closes the dependence on currencies such as the dollar or euro, which give their owners immense control over other countries. This video will examine Bill Miller's theories on how the Russian-Ukraine war could make Bitcoin bullish. In addition, the investor gives his thoughts on quantitative easing, recession, and the current state of the US economy. Make sure to click the like button and don't forget to subscribe to check out our other videos on cryptocurrency. In his interview, Miller talks at length about the great qualities of Bitcoin. He points out that it is not controlled by any country, which means no government can use it to control other countries. Miller believes that when you throw in the assets, fixed supply, and other great attributes, you have a great cryptocurrency that will stand out from other cryptocurrencies. Here is Miller explaining the power of the world's biggest cryptocurrency.
I think that basically, if you look at Russia right now, Russia has 16% of their $640 billion of reserves in dollars. They have 32% in euros. So they have almost 50% of their reserves in currencies that are controlled by people who want to do them harm. Now, I think we should do them harm. But the point is, from Russia's point of view, that's not a great position to be in. They have 22% in gold, and that's the only part of their reserves which other countries can't control. So I think if you're a country out there that is a non-reserve currency, there's about 100 of them, you might think about saying, you know what, maybe we should have something else out there that other countries cannot harm us with, and that is impervious to inflation or to being manufactured in greater quantities. And so I think it's very bullish for Bitcoin particularly. The rest of crypto is different. I think Bitcoin is unique, and the rest of crypto should be considered as a sort of venture investments, because they're all trying to solve other problems. Yeah, there's emerging opportunities in the market. We're at the beginning, early stages of a regime change. So from a Fed easing, accommodative bond buying set of policies to one that's the opposite. So draining the Fed balance sheet or down. Raising interest rates, and that raises the possibility that they can make a mistake. I mean, they're not flawless, obviously, and so you've got what's happening with volatility is you're getting some probability of a mistake, of recession priced in, and that's I think something that you're going to have to live with for a while until it's clear that doesn't happen.
Yeah, so are you in the recession camp? You know, we are all watching the yield curve. We all have memories of the past decade when the Fed tightened too quickly and had to keep undoing that. So do you think investors should be braced for that possibility, or do you think that it's not going to happen, it's just creating some entry points?
You know, I mean, one of the things that we try and do is try and not make forecasts about what's going to happen, just try to understand what is happening. So what is happening is the Fed is signaling a tighter monetary policy. What is happening is the economy is very strong, unemployment's low, earnings for many companies are at records. State tax receipts are rising way above expectations. Credit card usage is high. And so all of those things, the stimulus is tremendous. So all those things say that the economy is strong and a recession is not on the horizon. Doesn't mean it can't appear, but that's what's going on now, and we're trying to invest in this particular environment, and not one that we really can't forecast. Well, real rates are still sharply negative, and especially if you just use headline inflation. So I don't think the bond market is attractive at all. I think the Fed wants to tighten. They would probably like to see the curve steepen moderately, and we just don't see any value in bonds here.
One more question on that. Do you have a point of view on whether it'd be better for them to run down the balance sheet? Some say maybe that would help long end rates go up. It would unflatten the curve, but who knows, right? Or would you prefer to see more rate hikes, 50 basis point rate hikes, anything there that you're watching?
we've been kind of wondering why they're still buying mortgage-backed securities into this kind of a housing market. So I think both of those things in moderation make sense. So letting the balance sheet drain off with some of the securities that they own, as well as moderate tightening. They're signaling very strongly that they're not going to try and tighten too much. They're going to be sensitive to a recession. Doesn't mean they'll get it right, but I think they're looking at the right things.
If you want to listen to the full interview, click on the link provided in the description. We would love to hear your thoughts. Comment down below. If you're new to the channel, don't forget to hit the subscribe button and bell notification. Thank you for watching Daily Dose Crypto.